going to start with Alphabet earnings. The stock is falling after a big revenue miss and after the tech giant had closed in the session at a record high, but now it's down almost 7%. That's a market cap loss right there. We've got full team coverage as the conference call is underway. Josh Lipton is going to tell us what's happening. He's out in San Francisco. And Gene Munster looks like that one of those guys on the old talk shows. He's listening. The conference call from L.A. Let's kick it off with Josh, who just spoke with the CFO, Ruth Porat of Alphabet. Hi, Josh.
So, Joe, it's interesting. So Alphabet beats on the bottom. TAC actually came in lower than expected. CapEx did, too, at $4.6 billion. But as you mentioned, this revenue miss, they come in at $36.3 billion. Not good enough, not what the street wanted to see. CFO Ruth Porat on the call explaining some of the trends to analysts that she's seeing here. Take a listen to what she had to say.
There was a significant swing year over year in the impact of currency movements on our results this quarter, from a big tailwind in the first quarter of 2018 to a headwind in 2019. These affect both revenues and operating income, given the majority of our expenses are in the U.S. Based on the continued strengthening of the U.S. dollar relative to key currencies, we expect a continued headwind to our revenues and operating income again in the second quarter.
So you hear Porat there saying these headwinds will continue. I did speak to Ruth Porat just briefly there. She mentioned those headwinds, too. She also mentioned she's dealing with tough comps off a very strong 2018. And the timing of product changes, she said, also had an impact. The Q&A is just starting right now, so we'll get more color on what she means there. CapEx did see a year-on-year decline. However, she just told analysts they still anticipate the full-year CapEx investments will exceed those in 2018. They did mention the momentum they're seeing in cloud, but still no real insight into how exactly that business is performing, certainly not giving away the metrics that, let's say, Microsoft and Amazon does. I know analysts are often frustrated with YouTube, why they're not breaking that out. Still nothing from them on that front either. This call, though, just getting started. Like I said, the analysts are just starting to ask questions. We'll bring you more headlines as we get them. Back to you guys.
Josh, that was must have been an eyebrow raiser for you when you saw it. You know, Kramer was talking about service revenue numbers earlier, and he noted, unfortunately, he nailed it, I think. Thank you, Josh Lipton. Alphabet is the last of the FANG names to report. Facebook, the winner so far, up 7% since its report. Amazon and Netflix also higher. And right now we have Alphabet as the only FANG loser, down about 7%. At least it's from all-time highs, but 7% after hours. Is this your best chance now to buy Alphabet, or is the stock's record run done, guys?
Well, Joe, first of all, great having you on board. Long day for you as you start 6 a.m. So
bringing the lumber.
Bringing the lumber.
You know, I know how you really feel about me versus Melissa, so you don't have to say that. You like Melissa, that's fine. I'm here because I'm a team player.
We're like brother and sister. We're very close.
I know you are.
You and Joe?
That's weird.
That's very weird.
So I'll answer your question. Is now the best opportunity to buy the stock? My answer would be no, I don't think it is. This stock was a $1,000 stock, give or take, December 24th. Traded up to 1,300. You could argue 1,000 was overdone to the downside, and obviously now in retrospect, 1,300 was a bit overdone to the upside. But I think it floats in down to around 1,150, which is a 50% correction of that move. TAC, traffic acquisition cost, that came in. It's a really strong number for them. Good for them. But missing revenue by $1 billion in this environment, you're going to get punished, and I think there's a little more pain ahead, Joe.
But for all of last year, they were beating on EPS. They were a habitual beater on EPS by an average of 27%. And when you look at it now, I do think it's a buying opportunity. I think we were enamored with the beats that people said, oh, let's back it up here a little bit. It's still up 24% year to date. This is a buying opportunity. Not
I don't know. I mean, to me, the story's changed a bit here. So you've got a couple things going on when you look underneath the numbers. It looks like they've changed some of their ad products out there. So maybe that's a response to what's going on in Europe. Maybe that's a response to privacy concerns. Secondarily, they've really made a big push with their hardware, which is the Pixel phones. And they're spending a lot of money to get that, and we don't see any traction on that. So I think that's going to take a couple quarters for this to filter out, and you can wait on this one. I don't think you buy this dip at all.
Yeah, but
Pinto, I think we have a case here where the paid clicks
Why
numbers,
Pinto?
You actually.
They're all interchangeable.
Anyway, I think the paid clicks number down significantly quarter over quarter sequentially is part of the problem. And yes, the TAC costs are a very actually healthy trend going lower for people that have been watching this. I tell you what, I care most about Waymo and I care most about YouTube because these are places I think there is the most exciting kind of dynamic here. I think where people might be pushing this company around, because forget FX, despite that's the CFO's job, and Ruth Porat, I think, is doing a very good job at Google making a complicated story be as fundamentally broken down into the silos that they are. I think FX doesn't bother me. I worry about Amazon. I worry about Amazon's ad business. I worry about the perception when people see paid clicks not growing as fast as they were, Joe. I think that's part of the problem.
And you're not worried about European fines. I think that the market has done a great job at overlooking European fines. They're up to just under $8 billion, probably in the last 3 years or so. And it almost seems like it's a cost of doing business that the market has said, okay, we see some sort of an end to it, so we're not going to worry about it. So there's been a lot of headwinds for me about worrying about the privacy issues, worrying about the European concerns. And I think in large part, I can start to overlook that, even though I still believe that they're still there, to your point.
I don't know, but I mean, to me, it's impacting revenue, right? That's the problem you have here, is that if it's fine if there's fines, but if they have to change the way that they do business, which this quarter looks like they're doing, they're changing the way they do business. They're talking about YouTube potentially changing the way they do business to there. To me, the market has to digest that and have the fact that revenues decline. I think that's the biggest thing. Revenues declined on this quarter. That, to me, is a change in the business plan, and you have to stay away.
It's an important stock. Does it bother you, the NASDAQ is at a new high, if Google is not pulling its weight?
Well, anything at a new high bothers me.
It does.
Yeah, it really does. I don't know.
You see
does.
who's in the house?
Yeah.
Dom D-Day Chu is in the house.
D-Day.
D-Day. You good with D-Day?
Look at that.
All right.
It's got to be.
Not anymore. I think
Can we bring it back over to the set here?
I got camera people scrambling. I can
Very
immediately.
strange for our audience.
This looks like the episode of Game of Thrones. You see how dark it was last night? That's how it started, right there. No light.
Can I just ask, has anyone in Delta House been sufficiently bullish? I haven't.
I think Brian Kelly has been.
I have. So, my view on the market is as long as you have a okay economy and you have a Federal Reserve that's going to be accommodative, then you have to buy stocks.
Even though you're uncomfortable with it.
Even though I get uncomfortable with it. I mean, it doesn't make me feel great, but you know what? I have the market that I have, so I got to trade it.
Think of me as the guy sitting on the stairs playing an acoustic guitar, singing I gave my love cherry.
Right.
These guys are ready to take my guitar and break it. So I have been generally constructive, and if you think about Google's moved 32, 33% from those December 24th lows. They've basically kept pace with the triple Qs. They haven't been as strong as the semis, but Google's move here has been extraordinary. In fact, it went into these numbers as overbought on a relative strength indicator, a 9-day RSI of 82 going into this print. Does not surprise me to see the market punish it in the after hours. The bears will also say, hey, look, I think we've got a double top here. Let's go back to November 7th, I believe, is the last time it made, kind of these highs. And I think, look, in the short run, take a little money off the table, but there's nothing that's changed here. If anything, to me, Google's starting to monetize some really exciting parts of their business model with a management team that I think is as focused as ever.
Yeah, YouTube is going to be interesting when we finally break that out. But I think, to your point, it was overdone to the upside, which is why I don't think 1209 or 1210 is the bottom for now. I do think you can retest that 1150 level. Doesn't mean the company's broken. It just means the stock got ahead of itself. You mentioned Amazon, though. I think that's important. You go back to that Amazon quarter, and in the aftermarkets before Amazon started talking about one-day delivery, that stock was actually headed lower. It traded below 1900 briefly, and it appeared as though it wanted to continue to go down until they mentioned one-day shipping. So I would submit you're not seeing anything much different between what Amazon's saying, what's Google saying now. I think both stocks got ahead of themselves. Jeff Bezos warned us a couple weeks ago that the spend is coming, and I think the market might wake up to it now.
But everyone's hoping for the breakout of all these numbers with Google. I don't think you're going to see the breakout to the point that we're all going to be satisfied with. You're going to see revenue streams, but you have Apple pulling back on numbers, Twitter pulling back on numbers. The trend is not to give more numbers or not to give precise numbers. It's to give macro, and the macro still is bullish ultimately for Google.